Hey everyone, welcome back to Corporate Decoder. Today CPS Incorporated just filed an 8K reporting a financing event, and I am seeing one detail that is pretty interesting. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company announced they've closed on a significant deal involving residual interests, and the coupon rate on the notes is what really caught my eye. So what is this all about? Consumer Portfolio Services Incorporated. You might know them as CPS Incorporated. They are in the business of providing loan servicing and related services. Think of them as the folks who manage loans after they've been originated. On the 18th of August of 2026, CPS Incorporated announced they had successfully closed on a securitization deal for $80 million. Now, what exactly did they securitize? It is the residual interests from previous securitizations. This sounds complicated, but let's break it down. Essentially, they've taken the rights to future earnings from a pool of past loans and used them as collateral to borrow new money. The collateral includes what they call pledged residual interests from 4 different securitizations that happened between April 2022 and April 2023. On top of that, they've also included an 80% stake in a related company, a majority-owned affiliate that itself holds residual interests in 3 more securitizations from July 2023 up to April 2026. Now here's where it gets interesting. The notes they issued carry a coupon, which is basically the interest rate of 10.25% for a company like CPS Incorporated, which operates in the credit services space. A 10.25% interest rate on new debt is quite significant, especially when you consider the current economic climate. It suggests that either the underlying collateral is viewed as having a higher risk, or the market is demanding a higher return for lending in this sector. The company is also making it clear that this deal is just business as usual for them, nothing out of the ordinary. This is standard language to avoid any assumptions about special circumstances. The filing also points to an attached news release that details this transaction. It is not included directly in the text here, but it is listed as Exhibit 99.1, and the report is signed off by Dinesh Barwani, who is the Executive Vice President and Chief Financial Officer. This indicates that the senior leadership is aware of and has approved this filing. So, what is the takeaway here? CPS Incorporated is actively managing its capital structure by leveraging its existing loan portfolios. The $80 million securitization provides them with liquidity. However, the 10.25% interest rate is a key number to watch. It implies a certain cost of capital for the company and could be an indicator of how investors perceive the risk associated with their assets. Looking at the broader context, CPS Incorporated has a market capitalization of around $200 million and a price-to-earnings ratio of 10.2. Their stock has been trading in a range, and recent news has mentioned them selling notes backed by residual auto loan stakes, which aligns with this filing institutional investors. Like Black Diamond Capital Management hold a substantial portion of the company's stock, suggesting a degree of confidence from larger players. The fact that they are issuing debt at such a rate can be viewed in a couple of ways. On one hand, it shows they are able to access capital markets to fund operations or growth. On the other hand, a higher interest rate means higher ongoing expenses, which can eat into profits. For a company in the financial services sector, managing interest expense is critical. If interest rates continue to rise, or if the quality of the underlying loans deteriorates, this 10.25% could become a real burden. My biggest concern is the cost of this capital. A 10.25% coupon on $80 million is a significant annual interest payment. I will be looking closely at their future earnings reports to see how this new debt impacts their net income. What I am actually looking for is whether they can generate enough return from the underlying residual interests to comfortably cover this interest cost and still make a profit. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives.